Welcome back. Today we're going to cut open the Australian property market, specifically the Sydney market, though these rules of physics apply almost everywhere, and we're going to extract the truth about capital growth. If you have been listening to the mainstream media, you're probably confused. You hear about hotspots. You hear about up-and-coming areas near the new airport. You hear about affordable entry points. Ignore it. All of it. Today, based on a fascinating analysis of long-term market trends, we're going to answer the one question that keeps every investor awake at night. What actually makes a suburb value explode? Not just tick up by 3% a year. I'm talking about the suburbs that leave the rest of the market in the dust. The suburbs that 10 years from now, people will look back on and say, I wish I bought there when I could. We're going to break down the 4 pillars of value. These are the non-negotiables. If a suburb has these 4 things, it is destined for greatness. If it lacks them, it is destined for mediocrity, no matter how much the government tries to hype it up. We're talking about the dirt, the density, the diploma, and the dimension. Grab a notebook. You're going to want to write this down. Part 1. The first pillar, the geometry of scarcity, the dirt. Let's start with the most fundamental element of real estate, the atomic unit of wealth, the land. Now, I know what you're thinking. Obviously, land matters, but I want you to look deeper. When a government planner sits down with a map and a red pen to zone a new area, the destiny of that suburb is sealed before a single brick is laid. There's a massive misconception that new equals good. You see a shiny new estate. It has a fancy name like Willow Creek or Sapphire Waters. The marketing brochures show happy families and manicured lawns. But take a magnifying glass to the contract. Look at the lot size. In many of these new, hyped-up corridors, let's call them the Western expansion zones, you will see a trend. The average lot size is shrinking. We are seeing 300 square meters, 350 square meters. This is the shoebox trap. Why does this matter? Because of the supply and demand dynamic of luxury. Let's look at a case study of 2 hypothetical suburbs. Let's call the first one industrial rebirth. This was once a sand quarry or a factory zone. The government rezoned it. They carved it up into massive blocks, 680, 700 square meters. Even though it was industrial, even though it didn't have the history, the sheer size of the canvas allowed people to build mega mansions. Fast forward 5 years. That industrial rebirth zone has doubled in price. Why? Because you cannot manufacture more 700 square meter blocks near the coast. It is a finite resource. Now compare that to Suburb Shoebox. It's also a new estate, but the developer, greedy to maximize profits, sliced the land into 300 square meter slivers. 10 years later, Suburb Shoebox is a ghetto of mediocrity. The appreciation is sluggish. Why? Because a 300 square meter block is a commodity. It's replicable. It's not special. There's a distinct north versus south dynamic in many cities, particularly Sydney. Historically, the northern suburbs have commanded a premium. Why? Is it the trees? Is it the topography? Partially. But the mathematical reason is the average lot size. If you analyze the title deeds, you find that the northern enclaves usually have an average land size significantly larger than the southern or western equivalents. When you buy a property, you're buying 2 things. The house, a depreciating asset. It rots, it cracks, it goes out of style. The land, an appreciating asset. It is the scarce component. If you buy in a suburb where the average lot is 300 SQM, you are buying a lot of house and very little land. You are buying a depreciating asset. If you buy in a suburb where the average lot is 700 SQM, you are buying a massive chunk of appreciating scarcity. So, the first rule of our unicorn suburb checklist, does this area feature large, unsubdividable blocks of land? If the answer is yes, you have cleared the first hurdle. If the answer is no, if it's a sea of townhouses and courtyard homes, walk away. You're buying a liability, not an asset. Part 2, the second pillar, the density trap, the population paradox. This brings us to the most controversial point of today's episode. If you listen to economists, they will tell you, follow the population growth. More people equals more demand equals higher prices. This is a lie, or rather, It is a gross oversimplification. As an investor, you do not want population growth. You want wealth concentration. Let's talk about density. I want you to imagine a suburb that is friendly to developers. The council loves approving permits. They knock down one old house and build a block of 50 apartments. They knock down another and build a row of 6 townhouses. The population is exploding. Thousands of new people are moving in. But who are these people? They are tenants. They are transients. They are entry-level buyers. When you increase the density of a suburb, you dilute its exclusivity. You change the demographic profile from old money or established families to short-term renters. Let's look at the Burwood effect. 20 years ago, saying you lived in this specific hub was a flex. It meant you had a large federation home on a big block. Today, the skyline is choked with cranes. High-rises block the sun. If you say you live there now, people assume you live in a 2-bedroom apartment on the 15th floor. The brand equity of the suburb has been diluted by density. Now, contrast this with the insulated peninsula. Think of a beachside suburb. Let's call it Ocean Point. Ocean Point has strict zoning laws. The council is a nightmare for developers. They refuse to rezone for high-rise. There are no duplexes. There are no apartment blocks. The population in Ocean Point hasn't grown in 20 years. In fact, it might have shrunk as families get smaller. But what has happened to the prices? They have gone stratospheric. Why? Because the supply is capped. It is a closed loop. If you want to live in Ocean Point, you have to fight for one of the few existing houses. There is no Stage 2 release coming to save you. There is no new apartment tower offering a cheaper entry point. Furthermore, because there are no cheap apartments, the type of person who lives there changes. The lower-income demographic is priced out. The suburb becomes an enclave of high-net-worth individuals. This creates a virtuous cycle. High-net-worth neighbors renovate their homes to a luxury standard. The streetscape improves. The cafes get fancier. The prices rise again. So, when you're looking at a suburb map, look for the not-in-my-backyard energy. You want a suburb that hates developers. You want a suburb that fights to keep its density low. If you see a suburb with 50 cranes in the sky, run. That is not growth. That is supply glut. That is the death of scarcity. Part 3. The third pillar, the diploma premium, the schools. We have a land. We have the low density. Now, we need the anchor. What motivates human beings to spend irrational amounts of money? What makes a family stretch their mortgage to the absolute breaking point? Their children. The third pillar of a unicorn suburb is education. In the world of real estate, there is an invisible catchment line. On one side of the street, a house is worth $2 million. On the other side, 10 meters away, an identical house is worth $2.5 million. Why? Because the expensive house is in the catchment zone for prestigious public high school X. This is the education premium. You see, for the demographic that drives prices up, the upper middle class families, education is not a luxury. It is a necessity. They have 2 choices. Pay $40,000 a year per child for a private school. Buy a house in a top-tier public school zone. Often, buying the more expensive house is actually the cheaper option when you calculate the tax-free capital gains versus the sunken cost of school fees. But it's not just public schools. Proximity to elite private schools is just as powerful. Let's look at the upper north phenomenon. There are suburbs up there that are, frankly, inconvenient. They're far from the city. The commute is a nightmare. There is no nightlife. By all logical economic metrics, these suburbs should be cheap. But they're some of the most expensive postcodes in the country. Why? Because that is where the best private schools are clustered. Parents are willing to sacrifice their own comfort. They will endure a 60-minute commute to work, sitting in traffic, just so their child can walk 10 minutes to a top-tier school. Conversely, if a suburb has a school with a declining reputation, or if it is a school desert, the ceiling for property growth is capped. You might get investors, but you won't get the desperate, emotional owner-occupiers who drive record prices. So, Pillar 3. Check the NAPLAN results. Check the ranking. If the local school is a star, the real estate is gold. Part 4. The fourth pillar. The dimension, the forever home. we are down to the final pillar. This one is about the structure itself, but speaks to the demographic destiny of the area. We need to talk about bedroom count. There is a tragic mistake I see amateur investors make constantly. They look at a suburb, let's call it working classville. They see that the median house price is low. They think, great, affordable, but they don't look at the stock. Working classville is full of post-war cottages. 3 bedrooms, 1 bathroom, 1 car space, small living areas. The investor buys one, thinking it will double in value. It doesn't. Why? Because the functional utility of the house is obsolete for the modern affluent family. Today's wealthy family, the upgraders you need to buy your house in 10 years, has a specific requirement list. They need 4 bedrooms, 1 for each kid, 1 for guests. They need a dedicated study. Work from home is here to stay. They need 2 or 3 bathrooms. No one wants to share. They need a double garage. If a suburb is dominated by 3-bedroom, 1-bathroom cottages on small blocks, it cannot attract the upgrader market, unless those houses are knocked down and rebuilt. But here's the catch. In many of these cheaper suburbs, the replacement cost is too high compared to the end value. If you buy a dump in a cheap suburb for $800,000 and spend $800,000 building a luxury 5-bedroom home, is the final product worth $1.6 million? Probably not. The market ceiling in that area won't support it. So, nobody builds them. So the suburb remains trapped in a cycle of entry-level stock. Now compare this to the estate enclaves, areas like specific pockets of the Hills District or the newer, high-end subdivisions. These areas are purpose-built with 5-bedroom, 3-bathroom mansions. When a family in a 3-bedroom apartment decides to upgrade, where do they go? They don't go to working classville to squeeze into a cottage. They go to the estate enclave. They drive the demand for those large, family functional homes. I had a client ask me recently, should I buy in Suburb A? I looked at it. It was a sea of 3-bedroom, 1-bathroom layouts. I said no. Look at Suburb B nearby. Suburb B was known for larger 5-bedroom builds. Suburb B has outperformed Suburb A consistently. Why? Because it solves a problem. It solves the space crisis for families. In cities like Melbourne, you can solve this problem with townhouses. You can stick a 4-bedroom townhouse anywhere. But in Sydney, the geography is harder. The zoning is tighter. A true, freestanding 5-bedroom house is a unicorn asset. So, is the suburb characterized by big house stock? Or is it a graveyard of small house stock? If you want capital growth, you need to own the asset that rich families want to live in. And rich families do not live in 3-bedroom, 1-bathroom cottages. Part 6, the childless future myth. Before we wrap up, I want to address a piece of wisdom that I hear constantly from futurists and tech brothers. I remember an old boss of mine, a media executive, telling me years ago, don't buy houses. The future is apartments. People are having fewer kids. The birth rate is dropping. Everyone will want to live in convenient, small boxes near the city. This sounds logical, but it is fundamentally wrong. Here is the reality of human psychology. Even if people have fewer kids, even if they have 1 kid or no kids, they still crave space. In fact, the dinks people, that is double income, no kids, are often the ones buying the biggest houses. Why? Because they have the money. Because they want a yoga room. They want a man cave. They want a guest suite for when friends visit. They want a home office. The desire for personal sovereign space is hardwired into our biology. We are territorial creatures. Furthermore, in Australia, the family unit is still the dominant economic force. We have free education. We have childcare subsidies. The government wants us to have families. So, betting on a future where everyone lives in 60-square-meter pods is a bet against human nature. The demand for the big house on big land will perpetuate for the next 10, 20, 30 years. Don't bet on the trend of miniaturization. Bet on the enduring luxury of expansion. Conclusion. So, where does this leave you? If you're looking at property right now, put it through the 4-pillar test. Is the land component significant compared to the area average? Aim for above average. Is the density low and protected from rezoning? Avoid the cranes. Is the school zone a magnet for aspirational families? Does the house offer the family functional layout, 4 to 5 beds? Or can the land support it? If you find a property that ticks all four, buy it. Hold it. And in 10 years, send me a thank you card. Investing isn't about guessing. It's about recognizing the structural forces that drive scarcity. Don't buy the hotspot. Buy the fortress. If you found value in this deep dive, make sure you subscribe and leave a review. It helps us get the truth out to more investors. Thanks for listening, and see you next time.